All right, we've got about 8 people in here. We can get started. Great. Thank you everyone for joining. I appreciate you taking time out of your Friday to join. I think from what I've gathered in the chat, there's a few of you that are undergrads, I presume recruiting for banking. As you guys, would be great to hear in the chat if that's the majority of you and any topic specifically. But a little bit on my background and why I'm here. So my family's from Argentina. We moved to Miami and then ultimately Atlanta when my parents got married and my older sister was born. I did my undergrad at the University of Georgia. It's a state school within the state where I grew up. I was fortunate to take advantage of several scholarships. And my dad was an accountant, so business was always interesting to me. But I knew that accounting was never the right solution for me. So I quickly found out about finance and investment banking. And so, at the University of Georgia, like many of the universities you're at, there's a bunch of investment organizations and banking prep groups. And both of those helped me land my first job at Moelis. And so as a senior at both of those organizations, I was in leadership roles and helped train upwards of 40 people who got interviews and roles in banking. So that's kind of where I first picked up, mentorship and interest in the first place. I spent 2 years at Moelis Company. At the time, it was the generalist program. So I did a lot of healthcare, business services, industrials, and restructuring. So I was fortunate to get a pretty wide, range of experiences. And I appreciate now that they've switched to industry groups. At the time, I wasn't interested in private equity recruiting. I was really focused on just doing well at Moelis. I was a pretty top analyst. I got the 8A promotion, but ultimately, a lot of the things that I enjoyed most in banking were more related to PE. And so I made the transition to private equity and off-cycle recruiting and spent 3 years at American Securities, which for those of you who may not know, it's an upper middle market industrials traditional buyout PE fund. The last fund was about $7 billion we were investing from. And I spent 2 years there as an associate, my last year as a senior associate. And then the firm sponsored me to go to business school and come back to the firm. So I will be returning to American Securities as a vice president post business school. And while I am getting my MBA at Harvard, I was introduced to Leland, which is a great platform. So that's sort of a little bit about my background. And so if you guys have any specific questions, the office hours is meant to be a forum for you guys who are either searching for coaching or have other coaches who don't want to pay for additional hours and maybe just want to ask a quick question. I'm happy to help you. Otherwise, I'm happy to help you just get an understanding of what the landscape looks like and how I could specifically help you guys. And so, as we think about that, the way I think about the overall investment banking recruiting process, I would think there's 4 general variables. The first one is resume building and getting to the point of the application. And so that is pretty much everything that the majority of you have already done, right? So that is, what does your leadership experience look on campus? What is your freshman year internship? What's your sophomore year internship? Are you doing any part-time work during the semester? It's pretty much, and what are your grades? So there's this whole component of how do I get my resume, as attractive as it could be to these investment banks prior to the application process. And I appreciate that they're moving forward every year. So that's phase 1, but a lot of that's already done. That's already spoken for. There's incremental things that people can do to improve that, but that's not necessarily the purpose of Leland and why we're here today. And the other aspects of the interview process, in no particular order, are behaviorals, which I would think that is the most traditional, from the most traditional sense, it's can you walk through your resume in a very coherent sense? And so the point there is when you're sitting across the table, when I was sitting across the table interviewing intern and analyst candidates at Moelis, the idea was, does this individual truly have a fundamental interest in finance and investment banking? Do they have the experiences and motivation to be successful at the job? And have they spent the time to basically prove that they're interested in the position, right? And so it's your job to make it as very clear from, the beginning of your resume to the end as to what are the steps you've done to be in a position to be an intern at an investment bank. So that's the most classic question. There's a lot of different strategies for what the best way to approach that one is, which I'm happy to go on in more detail. But you have your story, you have why banking, and then you have a slew of other random behavioral questions, which can span anywhere from, what would your boss say about you? What would your friends say about you? What are your, strengths? What are your weaknesses? And there's a bunch of different strategies for that. So that's category one. Category two, I think, is the technical side, which for a lot of people, that's why they come to coaching. It's the most challenging. I divide that into a few pieces. One, you have traditional accounting, which in the most simplest sense, it's, what are the three financial statements? How do they connect? But what we're really looking for when we interview for that is specifically, if you were to just take each line item in the income statement or the balance sheet, do you fundamentally understand what they are, how they are interconnected, right? So if someone, buys something from your business, if they're buying it in cash, if they're buying it on credit, have you delivered the service today, or are you paying something that's going to be delivered in the future? All of those different types of things have implications on how companies account for their revenue, their profitability, and their cash flows, which have fundamental impacts on the valuation of the business. So, again, most simplest sense, how are the financial statements connected? Mastery is truly, I have a fundamental understanding of each line item on a balance sheet and income statement and how they're interconnected. That's the goal there, because as a financial analyst, you're going to be reading 10Ks. If you're doing public company M&A, there's a lot of nuances about options, the balance sheet, and banks want to be able to see that you've spent the time to understand this, because these are the fundamental building blocks of all financial analysis. So that's like the baseline, right? You have accounting, and then two, you have valuation. And before we get into valuation techniques, there's an understanding of enterprise value and equity value, which these two pieces, with line items from the income statement like EBITDA, profitability, revenue, are the building blocks of valuation. Enterprise value is essentially the total value of a business. It's made up of, equity value, market cap, and, all the other sources of financing, which can be anywhere from debt, preferred equity, and different tranches of debt, right? And so once you understand, the fundamental, enterprise value equation and equity value equation, then you can start to form valuation, right? Because you have the numerator, which is always going to be either the market cap or enterprise value, and then you have a series of denominators, which are different valuation methods and metrics. So once you understand those fundamentals, then you step into DCF, multiples, precedent transactions, and I separate LBO and merger, accretion, dilution, restructuring from that group, because those are slightly more complex technical interview questions. So at its core, if an analyst steps into an interview, the expectation is that they understand, what a DCF is, what the components are, getting to free cash flow, getting to terminal value, calculating a discount rate, putting it all together. That's the most simple thing that is fundamental to understand. Once you start getting to advanced interview questions, it's about, how to think about when DCFs are appropriate, which variables are most sensitive to the valuation. If I increase revenue, if I increase margins, if I increase the discount rate, what terminal growth rate should I use? These are the questions that bankers want to be able to press you on, and for you all to have a nuanced understanding of. And so at its baseline, it's, can I do a DCF? Do I understand the components? Expertise is, I understand all the variables. I understand how changes in a business can impact the DCF. And that is essentially the intrinsic valuation, which is separate from a market-based valuation. So intrinsic valuation is my expectations of the future cash flows. I'm going to discount that to a value today, which is going to give me an enterprise value, which, if I understand the equity value and the debt, then I can come up with a share price, right? So again, to recap, because I know I'm going pretty fast, you have accounting fundamentals, then you have valuation fundamentals, which are enterprise value, equity value. And then once you understand that, it's what are the different ways I can value a business, which is DCF is the fundamental intrinsic valuation, which we're looking at the profile of the business itself. And then separately, we have market-based approaches. So very simple. If I am looking to value my business in the chemical industry, I would also go look at other businesses in the chemical industry. I would look at their enterprise value. I would look at their profitability metrics like EBITDA, and I would be able to come up with a comparable valuation to be able to value our business. Same thing goes for present transactions. If I'm wanting to sell my business, I should just go look at what other businesses have sold for, and then I have a direct comparable. And again, this is just baseline. For each of these valuation methods, there's several nuances, like, which companies lend better towards market-based comparable comps, which are about precedents, what are the downsides of precedents, how do I take account for the fact that, my precedent I was using was in a zero interest rate environment, so people were able to pay more for businesses, so the multiples inflated. There's a lot of nuances to these, which is where interviews will go, but you have to understand the baseline as a starting point. And so I would say that is like the fundamental, if you want to be competitive in an interview, like that is a minimum you have to understand. And then separately, you have LBO and M&A, which are more complex financials or more complex valuation methods, but they're more relevant for specific banks. So at Moelis Company, which part of the business model of Moelis was we're going to partner with all of these private equity funds who essentially they're in the business of buying and reselling businesses. And so if I'm an investment bank, I've essentially made what is a transactional business into a recurring business by partnering with a private equity fund. To that same nature, that means that all of the buyers that we're marketing our business to are doing leverage buyouts. And so if you step into a Moelis interview, it was very important to like fundamentally understand what an LBO is, how to do it, and again, what the nuances and different variables that might impact the valuation method the most. So that's a method I probably won't spend as much time today unless someone has a specific question, but it is helpful. And lastly, you have merger accretion, which for the same pocket, I will ignore for the time being, and I'll come back to after I address some of the questions in the chat. And so that's essentially most of the technical interview. The other topic I want to talk about is networking, but I'll come back to that after I address two questions, just so if people have to run or they want specific questions asked, I can be responsive. So Abel, thank you for joining from Las Vegas. You're a freshman, pre-internship diversity programs. Sure, great question. Again, as we talked about, the first topic was how do I make my resume the most attractive for firms? How do I get my name out there? And separately, networking, which is highly important. There's almost every bank has a diversity program. Some are virtual, some are in person. Moelis's was in person for sophomores. They don't do a sophomore internship, but they did do a sophomore diversity program, which I went to. So a couple things. One, come up with a list of banks that are interesting to you. I have a bank list of like over 100 banks. If it's helpful to you, please inbox me directly. I'm happy to share it with you. And basically what I would do is go on their website or just type in, for example, Citi sophomore diversity program, and then repeat that for most of the banks you're interested in. And you will find either webinars, web series, online virtual conferences, or the most attractive ones, which are in-person, interview or resume drop selected programs, which give you, for the most part, those programs will give you an early interview for the actual junior year or sophomore year internships they offer. So if you can get in through that window, I think it is one of the most attractive ways to make inroads and bypass the typical, pretty challenging analyst recruitment process. And so that's one way. If like another random thing you could do, I used to look at Wall Street Oasis all the time. If you type in Wall Street Oasis and then you search freshman or sophomore diversity programs or conferences, I'm sure someone in that chat room will have like posted a full article with like a list of them. So I would check that as a starting point. If you want to chat about that further, feel free to inbox it. We can do like a 15-minute intro call where I can give you some more guidance. And so I'll just move down the list for a little bit to try to be quick. Annie, how do we prepare for markets, macro, econ related questions, and what are some methods? It's a good question. Again, I think this is highly relevant, but at the same time, if I were to rank how you should prioritize, I would make sure you feel really comfortable with the behavioral side of your interview, the core technicals, and then this is kind of in a class of technical interview question, which I find less common but still relevant. So walk me through a deal you've been looking at, or is there a particular industry or company that you like, or a stock pitch? They're less common questions. It is helpful to have something prepared. I think for the most part, banks are very nearsighted because the macroeconomic environment is directly what impacts the deal activity. And so if you look at it, 2021 was one of the most prosperous years in banking history in the last 10 years. We were working in almost a low interest rate environment. The economy was great. Private equity, there was a ton of dry capital, and you had record deal activity. And then COVID obviously happened. There was a lot of volatility, which volatility is extremely negative for deal making. It makes valuation very challenging. And what had happened was pretty much deal activity grinded to a halt. And so today we're in a much more stable environment where inflation's finally coming down, and most importantly, volatility is critical when you think about macro and economics related questions, because even if it's in a high interest rate environment or a low interest rate environment, buyers can adjust valuations to basically be successful in an interest rate environment. And so to give you a simple example, if I'm going to buy a business A, which has a certain set of cash flows, I'm going to raise debt to be able to buy this business. If it's a low interest rate environment, I can pay more for this business than I can in a high interest rate environment because I have less cash flow available. In the higher interest rate environment, more of my cash flow goes to pay interest, right? And so long as there's clear visibility in the direction of rates, buyers and sellers can come to terms on value. When there's a bunch of volatility, uncertainty, and a rapid drop or rise in interest rates, you pretty much have people who bought companies in the last 4 to 5 years in a low interest rate environment who were able to pay more for them. And you have buyers who are now buying businesses in a high interest rate environment who simply can't afford to pay the same price that those other buyers did 5 years ago because their cash flows are worth less on a yearly basis. And so you have a mismatch of buyer and seller expectations that pretty much declines deal activity. So that's pretty much where we're at today. Today it looks like there's more certainty. That's why you see a lot of continuation vehicles. It's at a part in the hold period where they're becoming forced sellers, and so activity is coming back. When you think about markets, econ-related questions, I think you fundamentally need to understand what the Treasury does, what the Fed does, how interest rates impact deal activity and volatility. I think those 4 concepts are highly critical. And Annie, if you want to chat about this further, I'm happy to. I have a subset of questions on this topic that I can share with you directly. So maybe just in the essence of time, I'm going to move on, but feel free to reach out on that topic. So Henry had a question about the best way to tackle technical prep resources. What are the best tech? This is a good question. Look, there's a ton of resources out there. A lot of the staple breaking into Wall Street guides are great, and a lot of them are floating around the internet. And so, don't take my word for it, but I'm sure you can get your hands on that without, too much stress. There's also a website called asimplemodel.com, which I think I used when I was prepping, which is pretty helpful. It was free when I was using it at the time. I'm not exactly sure what the model is today. Henry, we can talk about this in an intro call if you want as well. But that is like a hands-on, step-by-step based modeling approach, where you have different. It's like, step one, projecting, the P&L, income statement. Step two, free cash flow. Step three, discount rate. If you want to like knock it on the head and just like, what is like the largest course I can do, I do think the Wall Street prep is pretty good. It's probably not the cheapest, but it is very comprehensive in the fact that they have tons of content, and it's very modularized. So like you can just go step by step through most of the technical interview topics I walked you through. And separately, like YouTube is very helpful. So if you're someone who needs something a little bit more hands-on or someone to explain things, I think it's helpful. Try to find like Wall Street guides online or YouTube videos, and then try to find mentors on campus or a coach like myself who you've spent 30 minutes like trying a DCF and reading about it, and then spend time talking to someone who has experience like myself or a separate mentor, and get one-on-one experience so that they can like walk you through the more challenging topics. So again, Wall Street prep, breaking into Wall Street has like guides. They even have like interview question guides, which are a helpful starting point. You have asimple.com, you have YouTube, and you have this website called Wall Street Oasis, which I think there's a lot of insane stuff on that website. So I would not like use that as like the ultimate source of truth, but there is some pretty insightful content on there and links. And so those are 5 resources I would recommend as a starting point. Feel free to follow up directly with me if you want something a little bit more tailored, and I can help you come up with a plan that is like start to finish comprehensive. And I have a million resources for each of those topics. So when I was president of this investment banking organization, I was a junior, senior, training freshmen, sophomores, start to finish, from a technical prep perspective. So I'm happy to, if coaching is very helpful to you, I can work with this on you, and I have a lot of resources. Sandra, very interesting question. It's a good point. I think also there's a time period relevance to this. So just given like the election happened this year, and just how controversial it actually was, I think there's probably like an over-index to this point being relevant in interviews because it's such a top of mind conversational point. Had this been last year, like I don't know if it would have been so relevant in interviews. I'm not saying the experience isn't relevant. I'm just saying as a topic of conversation in interviews, it's probably highly relevant today, more so than it will be next year, the following year, and the prior 2 years. I did also find it very relevant because when I did my study abroad in Oxford, this was at the time of Brexit. And so I was able to, when people ask me how I utilized my summer internships before my junior year in investment banking internship interview, I worked for one summer at Wells Fargo, and my freshman year, it was very hard for me to get an internship because there wasn't that many opportunities around Georgia. So I did a study abroad to try to be productive and kind of progress my undergraduate degree. And so I actually ended up discussing it a lot because I did a presentation on Brexit, which most people were very curious about. So for me, the internship was about, showing drive and motivation to accelerate my career. And I think history and politics are generally very good conversational talking points. I think it's probably more relevant this year than it is in other years. So I wouldn't over-index to it. But in my case, I thought it was fairly relevant. And a separate talking point, I was even asked about that in my MBA interview to Harvard, Harvard Business School. So it's a very, study abroads are a very interesting conversational point. History and politics also, particularly as you get older, become a more relevant point of discussion than you are when you're younger. And so having some background in it is very relevant. All right, Eamon, I apologize if I mispronounced your name in advance. So you're looking for insights on how a freshman from a non-target school could navigate and craft effective strategy for the Ivy recruitment process with tips and resources you might have for success. Sure. I think you just need to start in advance. So, from a resume building perspective, you need to make sure that you've been productive with your summers. You try to get very involved on campus, show you have leadership experience, keep your grades up. Like you need to do the little things you can with the time you have freshman and sophomore year to just create an attractive resume. And I'm happy to have a specific conversation with you on a 15-minute call about what that looks like at your individual university, because it's hard for me to answer without knowing more exactly about what year you are, or I guess you're freshman, but what specifically non-target. So that's one. I think two, one of the interesting things about being from a non-target is that sometimes it can actually be easier to network because there's less representation from your university at a particular bank. And so, to the extent, LinkedIn is a phenomenal tool. Like if you just type in investment banking space, whatever university you're from, like it'll just spit out a list of individuals from your university currently in banking. And I would just start sort of like, not bombing all of them, but like reach out to a bunch of them, try to get the email format from an online website for the bank. And I actually think like conversion can sometimes be higher than it is from target schools because when people come from non-target schools, there's often more of a desire to give back to undergraduates who had a similar experience to them. So if I'm you, spend your first 2 years really building up your resume as strong as it could be from your individual university and work experience. Do a heads up on recruiting. My philosophy on networking is the earlier you can start, the better. Imagine you have a networking call and the first time you speak to someone, you're asking them for a job. It's a little bit more challenging than doing a networking call as a freshman and suggesting that, you're interested in banking. You looked at their LinkedIn, you want to hear more about how they managed to get into banking, and you don't have a request immediately. It's like, hey, I would love to keep in touch. I'm planning on applying next year. It's a much easier conversation. And so my advice would be build your resume, start networking today, and do the heavy lifting with the interview prep, because not every bank is like this. For example, Moelis was very open to non-target candidates, but there is a very high bar from a technical perspective because at this point, there's so many resources out there, which depending on what you want to specifically prep, behavioral or technical, if you inbox me, we can have a short chat about it. I can send you links, I can send you advice, and we could do coaching. But I would make sure that you start that because there might be a higher bar or an expectation that you've put in the work to make sure that if you don't have a business undergrad or there's less resources at your university to prep for investment banking because the clubs aren't as developed, that you've taken the time out of your individual day with online resources to kind of fill that gap. That is the expectation. And so that's how I would think about structuring that, if that's helpful. No, I'll take your question because I'd love to hear someone speak besides me for a little bit. So feel free. I don't know if it's just me, but I can't hear you.
Yeah, my bad. Can you hear me now?
Yeah, now I can.
So thanks for making the time. So I have two questions. One of them you kind of touched on late, right now, like networking. So I'm a master's student at Syracuse University. I graduated last year, but then, unfortunately, just the pipeline didn't work in my favor. And so I'm kind of late, right, as a master's student, although I'm back into like the cycle again. So my question has to do with like networking. I'm fortunate enough to know I want to do banking. I understand what it is, all the stuff I need to know. But to what extent how do you balance like showing up and saying, this is who I am, this is my story? Like, I would like an opportunity because all we need is visibility at some point, right? So, how do you balance that while also still, having the genuine intent to connect and build an actual relationship?
Yeah, yeah. And sorry, just to clarify, you graduated from your undergrad and you're doing your master's right now. Is that correct?
Yeah, yeah.
Yeah. I guess to the point I made about networking, like if look, the reality is most people are reaching out to someone because they want to work where you are or they want to learn something. So it's totally appropriate to ask for something.
Yeah.
I would just be thoughtful about how you do it. So let's say you reach out to me. Imagine I was still an analyst at Moelis at the time. Like you should probably spend the first 20 minutes just getting to know
Yeah.
me, why I worked at Moelis, what are the pros, cons of working at Moelis, any recommendations they have for the interview process. And then sort of towards the end, it's kind of a natural thing. If you do have a question, it's like, hey, I really appreciate your time. I'm really interested in the firm. Is there anyone else you could connect me with? Or could you connect me with your hiring manager so I could share my resume with them? Like those are very appropriate things to do. Um,
Mhm.
I just wouldn't lead with something like that. You want to try to develop a relationship up front. But look, at the end of the day, like if someone reaches out to me, I presume it's because they want a job or
Mhm.
information. So like you should advocate for yourself and like
Mhm.
take the time to ask for what you want. Just like make sure you do it at the appropriate time and don't lead with that because it just seems
Mhm.
a lot less genuine, if that's helpful.
Yeah, thanks for that. And then my second question was, what was your why banking prior to getting the job? And then after, being in the thick of things, what would you say is your why was, or how did your why banking change from what it was before to what it was while you were in the role or even after? And thanks for sharing your coaching details.
Yeah, I was sorry. I was just at the same time I was listening, I was just trying to get the QR code so Sandra could inbox me and anybody else could. You can also just
Okay.
search me on the platform at Joseph Astolfi. Um, so your question was what was my why banking and how did it evolve while I was at the role?
Yeah.
Yeah, look, my why banking was I grew up in a family uh, that worked in business. My dad was an accountant, um, and we often talked about stocks, investments. I always thought business was interesting. I thought a lot of the day to day accounting stuff he did was less interesting to me personally. Um, and so, at university, I found finance, I found investment banking. It just seemed like a very rapid pace career choice that for a 21-year-old graduating from college to be in an environment where you can work with, CEOs, management teams at like a super important point in this business's kind of inflection point. Like they're either doing really poorly and need more capital, or they're doing phenomenally and want to sell themselves, or they're looking for a new partner. These are like very high stakes transactions for a lot of people, for a lot of CEOs and investors. Like there's $1 million of potential profit or loss on the line. So it's like a high stakes, rapid pace, great learning environment for someone like going into the field of finance or their professional career. It just felt like a fundamentally awesome place to start your career and kind of grow rapidly. So I shortened like my actual, if I was an undergrad, I would probably add more context about why I got from A to B. But that was the short answer. What changed? When I was in banking, I really liked the deal environment. I loved all that. But I thought on my projects, what was most interesting was when we would partner with a private equity fund to think about how should we market this business? What's the thesis? What's the strategy? How are we thinking about valuation? And I think you learn a lot of that in banking, but there's also a lot of administrative stuff that you have to do to get the marketing presentation start to finish. And in private equity, what I spent the last 3 years doing, we get bankers sending us these very pretty documents that they've spent months of their lives working on, and we get to spend all of our time, evaluating the business, thinking about is this an industry we like, is this a business we like, is this a management team we like, and what is a fair price for this, and that's where I get to spend all my time. I don't have to spend my time as much. Don't get me wrong, there is still administrative stuff in private equity, but from my perspective, I get to spend a larger allocation of my time doing the things that I find most interesting in finance. And one of the sad things about banking is you spend so long on a deal and you sign the deal and it's like one of the most exciting points of your career, but then you don't get to keep working with that team, right? Like you've sold or you've helped someone buy something in PE, once you sign the deal, that's like the easiest part. The hardest part is actually, operating a business for 5 years and trying to make a profit on it. So like you will make amazing relationships with people in banking. Like there's a CFO I worked on in my internship at Moelis who still emails me every single year to try to go work for him at the company. And we're like 7 years past that at this point. And so you guys will all make relationships like that in banking. It just depends what you like the most or least of. So I hope that's helpful. I've been building a couple other questions. So if you want to chat, Nana, feel free to inbox me.
Thank you.
And we can chat more, but I'm going to try to get a few more that I know people have been waiting. So thank you for the questions. I think the next one is Ross, and I'm sorry, I'll try to get to the rest as quick as I can. Equity portfolio, you were self-employed as an equity portfolio manager, equity analyst. I recently completed my MBA, looking to switch to corporate or IB positions. Yeah, I don't know. I think this seems like a very common career pivot. So like when you think about investment banking, generally recruiting, like there's a huge funnel for analysts, which is a big source, but then there's a ton of churn and turnover with analysts going to different roles. And so the largest actual source of senior investment banking talent is actually MBA associates or post MBA associates. So I think this is a large recruiting like platform for investment banks. So I definitely think if you are interested in that, it's totally possible. The equity analyst and PE roles, like candidly, there's just less of them. I think it's totally possible. I think it's totally possible for you to dual track these searches simultaneously. Like you could, the problem with the PE stuff is it's slightly more ad hoc. And if you think about the trade-off, you're either looking at an MBA investment banking role, post MBA, sorry, which is an associate, or like a senior associate to VP level PE role, which is likely people who have had post IB or junior associate PE experience. So there's just less of the PE roles. They're probably slightly more competitive, and the recruiting process is less structured. But I definitely think there's several opportunities and it's worth taking a shot at. You can totally dual track this. And when you say corporate, if you're interested in like corporate development, I know you didn't include, you said corporate, but then you named a couple other things. If you're interested in corporate development, there's also a ton of M&A positions at corporate development that you could try to go for. So I would check there. If you want to chat more specifically, I'm happy to do so. I don't think the interview like process is actually for IB is actually that different from an analyst. There's probably a slightly higher bar, and there's more questions about like process, team management, due diligence that you're going to be on the hook for that analysts won't. But feel free to inbox me and I can do an intro call with you to just hear a little bit more about your background and what it is you want to do, so I could actually give better suggestions. So why don't we take that one as a follow-up if I didn't fully address what you were looking for on this call. And if you have any other things, feel free to send us a follow-up in this chat and I can try to get to it. I can also stay a little bit longer than 2:45. So if folks feel like they want something else answered, feel free to stay on until about 3. So Lucas, yes, recruiting cycle for new roles. I think right now we're in the thick of a lot of junior year summer internship recruiting. Some diversity stuff might have opened over the past month, but I think there's going to be a lot post January. Same goes for investment banking associate recruiting. For Ross, to your question, there's going to be a ton of that in January and February. So if that is something that you're interested in, it's probably good to start circling some banks and finding application windows and work on prep. Struggling with how to, sorry, I missed this, Ross, frame my skills to maximize my attractiveness to an IP or IB firm. Again, it would be very helpful if I actually saw your resume. So if you want to do a 15-minute intro, maybe send me your resume, inbox me, and we can search. I'm actually going to send my coaching platform. Lucas, it's probably best to through the platform, or Erica and Amanda, who in this recording are going to come after me if you find my personal email. So I'll send the link to my coaching platform, and you can inbox me there, and you can schedule a free intro call. Here's the link. So there's like a feature to schedule a free intro call. You can send me a resume. We can chat, and we can see if banking or if coaching is helpful for you. I also have I've dropped a discount code for anybody who I meet through this call on the left, if it's helpful. And so, Ross, let me come back to that one question. Well, William, to your question, I would just it would just depend on how different they are, to be honest. For example, if you're talking about like the difference between like a 3.2 and a 3.8, then like, yeah, I would do it. But if you're talking about the difference between like a 3.75 and like a 3.82, like just round to 3.8 and don't, because like naturally, if someone is reading your resume closer, like there might be a sense of, what is this person like hiding if they listed specifically their major GPA. Alternatively, so I would just, it just depends on how different they are. I think for the most part, people list cumulative. But if you feel like it's significant, I would just list your major GPA. It's not do or die. And Sandra, I guess your follow-up question, it is totally possible to break into PE without doing IB. Unfortunately, the most common, not unfortunately, but the most common alternative is to do consulting, which is a phenomenal platform as well. I will say PE firms have very different perspectives on this. There's some that almost exclusively hire people with consulting backgrounds and are really open to it. So two phenomenal funds that come to mind are Bain Capital and Hellman and Friedman. If you just go on their website and find the associates and click on them, you'll see that a lot of their backgrounds actually come from like big three consulting firms. So it's totally possible. I think those are the most common because the reality is PE firms, when they're looking for associate recruiting, they're looking for people who have a fundamental like baseline of financial and due diligence capabilities that can help support like their due diligence process. Like the reality is they're not looking for associates to come build theses. Like that's why they have the MDs and directors, but they are looking for people who have, the fundamental baseline skills who can grow into a more senior position. And both of those like training platforms, which is consulting and investment banking, generate very hardworking, type A, analytical minded people. I will say, depending on if you are a consultant and you're recruiting for a PE firm that traditionally hasn't hired as many people from consulting backgrounds and typically does investment banking, there are strategies you need to take, and there is probably a higher bar from a technical perspective, because the common criticism is this person understands a due diligence process to the T, because they probably worked in the private equity group of they probably worked in Bain's private equity solutions group, which what that means is when we're at American Securities and we're looking to buy a new company, we will hire a market and ops advisor to help us evaluate the quality of the business. If you join Bain's private equity solutions group, you will probably be one of the associates that end up working on one of our projects, and you will help us evaluate whether the market opportunity that we're investing in is attractive or not. And so you have a good understanding of like the quality of a business and what we do, but oftentimes there's a disconnect between this is a good business, this is a bad business. However, you could have a really good business that is a very bad investment because you paid too much for it. And so the common issue that I run into when we interview consultants is that they lack like business quality with business valuation, which are two different things. You could have a bad business that makes a good investment at the right price. And so just being very thoughtful about the LBO model and technicals is probably like the right thing to do if you come from the consulting background. Otherwise, I will say anything's possible, but it's very challenging. Like there's not that many PE roles. Most people in banking take a shot at recruiting. So it's a large population interviewing for a small subset of positions. And so it can be challenging outside of those backgrounds, but it's obviously not impossible. Like you could do private credit, you could do, private equity from the start, secondaries. There's different analyst roles you could do that would also lend well, but unfortunately, those are probably just as hard as recruiting as investment banking. So if anyone has any other questions, feel free to populate them. If not, I'll maybe just take a quick shot at Ross, your question about how to tailor my resume. Yeah, look, I think you just put yourself in the mind of like an investment banker. Like they want to, especially for like an associate role, like they want to make sure you have like a fundamental baseline and knowledge of, financial analysis. So whether you have any specific projects or experiences that lend well to you having, valuation experience, financial analysis, those are obviously like anything that highlights analytical aptitude in the notion of like finance and if possible buying and selling is ideal. So that's like one thing you want to highlight. The other thing you'd want to highlight is like team leadership, because at the end of the day, as the associate, you are sort of the lead on a lot of the materials. Like the VP is going to guide, but you are taking a leadership position on a lot of material creation. You're in charge of the analyst. Things can be very stressful, and so having experiences that highlight anything team based or leadership or is helpful for them to see that like, hey, you have finance experience, but you also can lead analysts to an outcome, and then you have good experience managing projects for senior people like MDs and VPs. So from a experience perspective, like whether those are already on your resume or you can sort of tailor your bullets for the specific projects you've already worked on to highlight some of those aspects, that's probably what I would focus on. Again, feel free to inbox me and we can talk about specifically like like with your experience subset, what might be sticking points for employers and what you might want to brush us up on specifically. Abel, to your last point, I think Leland just changed their policy to limit the amount of intro calls new customers can do. So what I'll do is I'll one-off email some of the leadership at Leland to try to see if I can get you an exception for this. So let me take that back. Can you try booking the free intro call? Let me take that back and come back to you. Separately, energy. Okay. This is good. This is good feedback. Do you guys mind people? Sorry, I'm just doing some searching on my end to see if there's any solution I have. I don't have a solution top of mind. I will ping Leland leadership to see. But do me a favor, and both of you try the same thing tomorrow or over the next week, and let me know if you're still having the same issues. I just jotted down your names, so hopefully I can. I will follow up with you. But for the most part, the free intro call is typically free. And so if anyone else has any questions, feel free to inbox me, schedule an intro call. We can follow up on any of these topics. Eamon, I'll try to take yours as probably a last question. Any finance internships for freshmen? Yeah, when it comes to finance internships for freshmen, here's my perspective on this. There's very few formal investment banking programs. Like some of the large bulge bracket banks call it JP Morgan, Goldman, they'll have some freshman conference or leadership series, but the reality is freshman internships are not as common. And if they are what I call ultra mega competitive because everyone wants to get in the feeder system as early as possible. However, I don't exactly remember if you mentioned like where you're from before, like non-target, target, like what markets you're in. But my advice would be like find through your university, like if they have speakers on campus from anything from wealth management, corporate banking, anything in the banking umbrella more broadly, doesn't necessarily need to be investment banking. Just like send these individuals cold emails and just suggest like, hey, I'm a freshman. I'm very interested in careers in banking. I know you don't have a formal internship, but I would just wanted to reach out to see if there's any way you'd be interested in having an intern or someone work for you over the summer. Like I cold emailed a ton of people to see if I could generate an internship that doesn't exist. And it doesn't necessarily need to be in investment banking. The goal of a summer internship your freshman year should just be to show, hey, I am very active. I'm like meaningfully trying to build experience. And if you do land an internship, it's like, hey, by the way, I have corporate experience. I know how to behave in a work environment, which you'd be surprised, but is valuable to employers. So that would be my goal. Like search all of the investment banks for any freshman programs they have. You'll probably see that there's not many. Check Wall Street Oasis if they have any, and then open your umbrella to anything in the finance industry, even if it's like local wealth management firms, just to show that like, hey, you are very proactive, you are working, you have corporate experience, you'll know how to behave when you have an internship. So that would be my perspective freshman year. If you can't find anything, I think a study abroad is a great alternative. It worked out for me. And for developing and practicing investment banking skills, the reality is I'm not sure you really can. It's a very intense culture. Even if you practice on your own time, it's difficult to replicate the experience. I think the best thing you can do is practice different valuation methods, DCF, LBO, multiples, precedents, merger, accretion, restructuring. Look into guides and just practice the technicals, because the reality is you're not going to be able to replicate the investment banking experience. And I don't think people expect you to. You should just think about what skills do they look for. They look for analytical aptitude, which will be reflected in your grades, your experiences, and any professional experience. They're looking for hard work, which will also be reflected in many of those. Attention to detail, which will be reflected in your resume and your prep, right? If you spent the time preparing and you know the nuances of a lot of these valuation methods, that'll show not only is this individual interested, they've taken the time to learn the valuation methods. So like think about what skills they want: hardworking, analytical, attention to detail, works well in teams. And there's ways to generate those skills without practicing and working in investment banking, because you can't that way. So like working in teams, getting good grades, getting good internships, prepping hard, that will all prove to interviewers that you have those capabilities. It doesn't have to be in banking. So I think with that, I will probably wrap. So I will send a message to everyone post. Here's my link again if anyone wants to connect with me. For those two instances about the $40, I will specifically check in with you guys and Leland. So please recheck the coaching link sometime next week, and I will see if it's been resolved. But thank you all for the time. It's a pleasure. I've mentored probably over 50 people between investment banking and PE. and even MBA stuff at this point. So if you think coaching is helpful for you, I'm very helpful to partner with you. We can structure it as much or as little as you need. I have a bunch of resources. I can share resources. We can do mock interviews. If you just want someone to test your capabilities, I'm happy to schedule like a 30-minute mock interview with you, and then we can debrief. I can be very flexible. So just keep that in mind. I can either take you through start to finish technicals, behaviorals, or I can just kind of be a finisher and focus on like testing how good you are in each of these categories with very challenging questions. So feel free to use me as a resource however you may need. Link is here, and there is a discount on my rate over the next week if you sign up. So thanks, everyone. Hope you enjoy the holidays. Happy Friday. Have a great weekend. It was a pleasure.